back to the channel. This is Hena. I'm a CPA based off Los Angeles, and on this channel I try to get you all your tax, finance and business world information in the most easy to understand language. At least I hope I'm kind of doing that job. If you are new to the channel, I would love for you to like and subscribe. If this is some information you or anybody else you think is interested in, please do forward it. I would be grateful. That being said, if you are again new, yesterday I did a video about the PPP, one of my clients, the first one, the successful PPP loan that was funded by the SBA and given to the bank, so the client is good to go. So if you would want to go see it, I will have a link in the comment section. Please go take a look at it, and hopefully most of the clients or all of them will be able to get away with, or at least get all the loan forgiven. This video, as I promised yesterday, is on the Biden's tax proposals. What I plan to do is bring an overall idea of what are the bigger changes that are being proposed. Of course, with Democratic win in Georgia, the recovery plan looks like maybe will be a more robust than had Republicans taken the seats. There is a good chance the stimulus will be much bigger. I think Biden did mention that this will be in the trillions of dollars. So I'm sure, like many, are expecting the latest stimulus package once President-elect Biden comes into office to be a big one. They want to get the most to the economy and this country who's suffering, especially with the December jobs report is kind of like a grim picture. So they have more than enough reasons to stimulate the economy with more money that can be pushed into it, and the people can be brought back to their feet. The $2,000 relief seems like a little more of a reality than earlier. President-elect did say earlier that $600 is more like a down payment on the 2,000. So we'll see whether we'll end up getting the balance of the 1,400 or there's another 2,000 coming. I will be here to let you know if that happens. Meanwhile, on this video, I plan to give you an overall view of what could be expected with the President-elect Biden's tax plan. I'll start with the individual because I'm sure that's what everybody's interested in, and then I'll take over some on the business, and we'll go from there. If you have any comments or questions, feel free to put them in the section below and I will get back to those. Let's start. Of course, there are big changes coming to the payroll, to the individual tax return, to the gift and the estate taxes, and the business. The biggest one, which everybody's talking about, and has some of my clients kind of on the edge, looks like from an individual standpoint, it's the people who are making the $400,000 will be hit the hardest, for the lack of better word, in the Biden's tax plan. So anybody who's below that, this may be great for you, but a lot of people who are at that tax bracket, in this day and age, I think if you're looking at two highly qualified professionals household, that will basically cover all of them who most likely are at the $400,000 range. Or people with businesses who have, at the end of the day, a Schedule C or K1s that get rolled into their personal return and ends up taking them to that tax bracket. So let's begin. If your income is $400,000 or more, and we are talking about AGI, not the gross. There's going to be a difference on that, so keep that in mind. Gives you a little more in terms of the room to play with, but not too much. So $400,000, your tax bracket would be going to the 39.6% from the current 37%. That's about 2% more than what you could be paying, that little more than 2%. He does want to put 12.4%, that's your employer and employee portion put together, the Social Security, for the old age survivors, the disability insurance payroll tax for anybody over 400,000, making 400,000 and more. What is going to happen is there's going to be a donut hole, for the lack of better word. Basically, the capture of the Social Security stops as of right now at 137,000. Let me confirm the number. Yes, $137,000. You don't pay any more taxes. So if you do notice when you do your when you are towards the end of the year, if your package is more than $137,000, your takeaway ends up being a little bigger than otherwise, and that's just because your Social Security and Medicare, the 6.2 portion of the employee portion, is not coming out of your income, so your take-home paycheck is a little bigger than the earlier part of the year. Now, Biden plans to have this reintroduced after the $400,000 range. So if you're between the 137 and the 400, you're good. Basically, no changes for you. Now, if you do make more than $400,000, there will be an extra 6.2, which will make it the 12.4 total between employee and the employer portion. That kind of hitting as well. So I am not sure how the calculation will work. Honestly, I'm really thinking, will they stop at 137? Let you make till 400,000 without an effect, and the moment you hit 400,000, they'll start the 12.4 again, or just because they know you're making $400,000, they'll continue with the 12.4 all the way. So that's a detail that I'm not sure how that's going to happen, but I'm pretty sure reasonably it seems like there will be a donut hole, which means between $137,000 and $400,000 of your income, there will be no extra tax taken, and the moment your gross for the year, like the year to date, as your employer is giving you a paycheck, or you get your paycheck, as soon as you hit above the 400,000, the 12.4 kind of kicks back in. So that's like, I think there's enough detail on that. Capital gains. So the capital gains and the qualified dividends would be at the tax rate of 39.6 for anybody who makes $1 million or more taxpayer. So if you're making less than $1 million, your cap gain would be as it is. But if you are making less than $1 million, so if you're making more than $1 million, your capital gain and qualified dividend would be at a 39.6% tax rate. So no break there. This also eliminates the step-up basis on capital gain. It will be a little harder for people, I guess, going forward who get the inherited stocks, or the 401ks, or the stock portfolios from maybe their parents or whoever kind of is giving it to them. Usually what would happen is, when you would get the stock portfolio, whatever is the date of the day that's given to you, like whoever is deceased and stuff, and the stock value of that day, your basis basically essentially becomes that. Now they are proposing to doing away from that. So if, let's say, your parents bought Apple when it was, or Tesla when it was like, I don't know, $100, and today it's standing at, let's say 700, so your gain is 600. On the other end, if they bought it at 100, by the time they passed away or they gave it to you, you're looking at 500 as of that date, the price of Tesla. Your gain is between the 5 and the 7, the $200. So certainly it will be a lot more cap gain on because the step-up basis is going to go away. Which kind of comes in line with the estate and the gift tax. They would want it to be restored at the 2009 levels. So if you do think, or you're one of those people who have a good amount of wealth accumulated, or you think you are going in the direction where between your estate may be valued more, more right now, and you do want to avoid, I think get hold of some financial advisor to take care of your estate and gift taxes, so you are kind of grandfathered into it right now when the limits are higher compared to limited at the 5.5 million limit. Right now I think we're looking at about 11 million. So certainly this is definitely for people who have that kind of money, but if you do, you would definitely want to make sure you get in line and get it taken care of, your estate planning done before this kind of sunsets. So that's that. The Section 199A, that's your business tax credit that everybody's been getting. The 20% on the Schedule C, that kind of becomes, you get a credit for it, so it's essentially non-taxable. Or for the businesses who are sitting at 20% rate, it's going to be phased out again for people more than $400,000. So keep that in mind, something that's in plan. Biden does plan to work on the earned income tax credit for kids aged, especially for the childless earners age 65 and plus. So I guess that's a good one, because otherwise it really was peanuts before. So if something to definitely look into for people who are 65 and older and qualify for the earned income tax credit. So this would be good for them. There are talks about the expansion of the child and dependent care tax credit to a maximum of $8,000 from the current $3,000 limit, and also increase the reimbursement for them from the current 35% to 50%. So, which kind of makes sense. I mean, I don't know who is getting their child and dependent care taken care of in $3,000 for the year. We're a lot, I mean, and that's pretty much no matter where you live, we are paying a lot more than that. So an 8,000 seems a little more reasonable from that perspective compared to a 3,000. And a 50% reimbursement certainly is a good rate to go with. This would be capped at 16,000. So if you have 2 kids, you're at 16,000. Now you have 3 kids, you're still at 16,000. So that's where they're looking at. The child tax credit goes from to 3,000 from the current $2,000, and this is for kids 17 and under. On the other hand, if you do have kids 6 years or younger, you are looking at an additional $600. So that's welcome bonus, I guess. The extra that a lot of people spend on diapers. For the lack of better expense that you could get, but $600 additional if your kid is or your child is under the age of 6, and $3,000 for 17 and under. So if your child is 5-year old, you are looking at $3,600, and if your child is 7 years old, you're looking at $3,000. They also are looking to make this fully refundable, which is good, because earlier it kind of varied upon what your tax is and how much of it you get back. Also, in the plan, they're looking to reestablish the first-time home buyer tax credit, which is good, I guess. Though I'm not sure, the prices in the housing market are kind of ridiculous right now. Though justified, given the fact that the interest rate is too low, so balances it out, I guess, in the long run. But they are looking to reestablish the $15,000 credit for the first-time home buyer. And also a refundable renter's credit capped at $5 billion, but they are looking to aim the credit such that between rent and utilities, you are not paying more than 30% of your monthly income, which is a good way to look at it, because 30% is I guess it should be a decent amount to pay between the two. And instead of having a dollar value, a percent works better, because it varies from person to person. So at the end of the day, it would be a solace to know that at the end of the day, you will not hopefully pay 30% of your income between rent and utilities. And I know a lot of people who are paying way more than that. Some talk about corporate tax. As we all know, he's looking to take the rate from the current 21% to the 28%. It will be one of the highest in the world. I am not sure I personally am okay with that. Not that it matters, honestly, what I think, because you do have to stay competitive in the world. I'm not sure if 21% was great. I hear, the both ways of it, but I guess a couple of percent higher would have been better. 28 is kind of putting you on the higher end of the bracket from the world standpoint. So somewhere in the middle, 24, 25, we'll see what happens with the Republicans. Kind of that take would still have to come in, because this is what Biden tax plan has proposed right now. This still has to be introduced, passed before it all becomes law. And of course, we all know there's tons of negotiations that are going to happen between all of that time. Okay, coming back to this. They are also looking to create a minimum tax on corporate book profit for 100 million or more. This I don't think is a bad idea, especially considering the likes of Apple, Facebook, Google. They hardly pay any taxes. At the end of the day, I know they create a lot of jobs, and at the end of the day, they have to be given their due credit for picking up the economy and raising employment and stuff like that. But if they walk away without paying any taxes, I'm not sure how much is that fair also. So what they're planning to do is have a just like for us individuals, there's an alternative minimum tax. There's just so much of credit you can take, which is at the end of the day aimed not for the higher earners to abuse the systems in terms of credits and the rest put together. So similarly, they're looking to do that for businesses. This will serve something like of an AMT for the corporates. And again, this is for corporations only making 100 million or more. That's like really big corporations. The AMT would be at about 15%. But even before this number comes in, it would be the corporations will be allowed to utilize the NOL and the foreign tax credit. So I mean, I think it's a fair proposition. They also plan to have a credit for small business for adopting workplace retirement savings plan. I think that's a great deal. You are not, as an employer, let me make it very clear, they don't want to force you into contributing to the plan. They're not telling you, okay, you have to offer a 401k and match for your employees. All they're saying is get something in place. And for all the businesses out there, you could literally have a 401k or some kind of a savings plan without having the headache of having to contribute to it. As long as you offer it to your employees and keep it at the same level company-wide, you're good. And I guess they want to have that concept where at least it is available for your employees to be able to contribute, and hence, for you to offer one. And for small businesses, they are willing to give a credit to promote the same, which I think is good. We all know Democrats are into renewable energy. So of course, there's a bunch of credits that are for renewable energy. There's a credit for residential as well. A lot of that solar thing is going to come back. Electric vehicle tax credit. Right now, it's not so much in, kind of like has sunsetted from the last one. So they, of course, will looking to bring it back. So that's definitely on the agenda. One of the interesting things I saw from corporate standpoint is that they are looking to impose a 10% extra tax on corporations that use offshore manufacturing and services to foreign nation for basically for products and services which are at the end of the day for American consumption. I hope I made myself clear. So if you are a manufacturer who uses maybe China, India, any of those countries, either to manufacturing your product, or you have services back home, you have a call center there, you have there's a lot of IT services. So those corporations, I'm assuming, are getting targeted because you are using offshore manufacturing and offshore service jobs to cater to your American citizens or American clients. So they are looking to put like a 10% extra tax on that. On the other hand, to make it fair on the other side, there is a 10% credit, the Make in America credit, to restore production and manufacturing and services within the country. So I guess if you are one of those people who do have foreign manufacturing help or foreign services, this is something for you to take a look. Maybe you want to bring it back. There is a 10% credit for it. I'm not sure how all of this will work at the end of the day, because right now, President-elect Biden still has to take to the office. I'm sure coronavirus is the pertinent right along with the economy, because between the economy and the healthcare, it's a really ugly scene out there. So we'll see how all of that goes. This all is an idea of what the Biden side as of right now would like to have. There's a lot more to it. I'm not sure if everybody's interested in some of those other boring details, especially when I know doesn't even apply to the majority of the people probably listening to this. So I'm going to let that sit on the side. But this is like the major chunk of what I thought affects the normal American, the you and I. So there's a lot more into it. All of this has to be, the Democrats need to kind of put a proposal together, and what all will make into that proposal is one thing. What happens when it actually goes on the floor for discussion, negotiation, and what I'm sure Republicans would put some of whatever they want or negotiate whatever has been put into by the Democrats, and the end results could be something different from all of this. Though, considering both the houses as of right now are under the Democratic majority, a lot more easier for President-elect Biden to get his point or get his way with the proposal. So we'll see what happens, though I'm sure it's going to be a big fight from Republicans as well, especially when it comes to the corporate part of it. I will keep you guys updated with what happens. If you do like or you think somebody else can utilize what we were discussing today, I would love for you to share and like the video, subscribe to the channel, and let's stay in touch and get on with this journey. I will be bringing updates as they come into being. And as usual, I like to end my videos on a positive quote. Here's the one for today. Forget all the reasons why it won't work and believe the one reason it will. You guys have a great Monday. I'll see you in the next video. Take care.